What's up everybody, this is Jack from Crypto 49er, bringing you my knowledge in cryptocurrency. Today I want to talk about Gekko Trading Bot and RSI Analysis. Basically the idea is to use backtesting to help you write better strategies. So I know last week I talked about this backtesting overall. I'm trying to get a better idea on how much profits you can make. That's great and all, but it doesn't really help you identify some of the issues that your strategy will have. Because essentially, when you are writing a strategy, you're deciding on when your bot will buy and when your bot will sell based on certain criteria. But sometimes that's just not enough. Before I get into deep, let me show you the end result of what I end up creating here. So this is what I end up creating or having Gekko actually write out in a log file. So you'll see beginning time and end time, the stock price and the end price, and just the RSI level, where it was at when it started and where it ended at, and the duration, which is very important, and I'll explain that in a bit. So going back to the very basics of using the RSI, as everyone that know a little bit about RSI would know, when it goes below 30, it is oversold, meaning that there's a good chance it'll go up. And then when it gets above to 70, that's when it is overbought, meaning it's most likely going to come back down. So that's a basic idea of using the RSI as a indicator for buy and sell. So now let's say that this is the perfect scenario, right? Where the starting point is here and the ending point is there. So now you actually see you do make money on this particular trade if your bot was actually trading based on these criteria. So we just call this portion right here a perfect cycle, right? So this is the perfect completed cycle where following this basic rule, you'll make a profit on that particular trade. So now unfortunately there are times though, if you look at it here, I'm looking for a good example. So this is a good example right here. So it fell below the oversold territory. It tried to climb back up, but never completed the cycle of going back to 70. So in this case, it pretty much fell back down and you pretty much were lost. Let's see, from here to here you were lost a little bit less than 1%. If your particular strategy is to simply buy and stop loss if it goes back below the oversold territory, it's just as simple as that. So if that's your basic strategy, right? So you have two sell points. So your buy point is when it goes below oversold, and then you will sell when it goes above oversold. And at the same time, the second sell is the stop loss sell is when it goes below oversold again. So that's a very basic, simple strategy. But the problem is, how often does your particular trade pair that you're looking at actually complete a cycle, and how often does it fail? Well, if you use your standard backtesting tools that's available out there, it's useless. None of the tools out there will tell you this, because the problem is the tools are really just looking at the price points. So they're looking at the parameters you can set to help you optimize your strategy. But it still doesn't tell you these little nuances that you really should know about how your strategy will work. Basically, if you are going to use that particular buy and sell criteria, a standard backtest will not tell you this information. It will just tell you, oh yeah, just set it to, let's say, if you're setting for optimization, it will just say, okay, set it to 25 for a low and maybe 82 for the high or something like that. And that's only because it's based on the best trade. So basically, there may be one trade where you'll be making like 5% in that time frame. So, oh yeah, that's the best option right here. And then based on that particular trade, you end up making the most money. But then you have all these other trades that were really horrible, or maybe not even making money, or maybe losing you money. So the overall result, if you look at a standard backtest, and I'll probably pull one up, you have like a 30% win rate, and at the same time it's still profitable. So meaning the idea is, oh hey, you're gonna have a profitable strategy, but you're gonna be losing 2/3 of the time. And as I mentioned in last week's video, the win losses are not accurate in Gekko. I mean, if you implemented my backtesting modifications, that should be more accurate, but it still doesn't help you to understand what your strategy is doing. So let's get into the code, and I'm going to show you a little bit more of what I'm trying to get at. I wrote this JavaScript file called RSI Analysis. It's basically, it runs in the strategy, it runs as a strategy, so it is inside the strategy folder. But as I clearly stated, this is not a strategy. It is a backtesting tool that simply calculates the following: how often it, as in your trade pair, completes a oversold and overbought cycle, the average overbought and oversold, how long from oversold to overbought, and how many completions, how many failed cycles. So that's very important to know in terms of writing a better strategy. And the last one is the lowest highest RSI. That might not be so useful, but it's just something like fun to look at anyway. So in the config section here, it's under config paper. Obviously this is like still a backtest essentially. So it's just going to use backtesting data. So, and then in here, my RSI analysis config section, it just have this very standard, like this is basically exactly the same settings you would use for RSI strategy, or a strategy that only relies on RSI. So the interval is 14, the oversold is 30, and overbought 70. So when you run this, so I'm just going to run it over here with my inside my debugger, which is already set to run RSI analysis as the strategy. So now it's completed. So in addition to creating this file that I showed you previously, it also does this in here inside the debugger. You can see that at the end of the run, it'll tell you the completed cycles. So meaning the completed cycle is how many times that trade pair went from oversold to overbought successfully without diving back down into oversold again. So, and then in here it tells you the complete cycle average duration, which is 48, meaning it only took 48 candles, and I'm setting it currently at 5-minute candles. You can set it to whatever time frame you want it to. So the end result is that in 48 5-minute candles, this is essentially the average complete cycle is about 4 hours long. So, and then you see the number of failed cycles though. Unfortunately for this particular trade pair, which is this Ethereum USD, the failed cycle is 469. So just based on these two facts alone, this is not a very good idea to use the standard oversold at 30 and overbought at 70, because looking at this, you can tell that you're most likely going to lose money. So it doesn't actually tell you how much you can lose, because you can always add all these stuff into this analysis if you want to. But my main focus here again is to get a really good win rate, and there's another part to it. So, but you can see that there are 469 failed cycles and the duration is about 21. So it seems like what's happening is what people that use RSI know quite often is actually the double dip. Usually a double dip is like this. So you see it went down below 30, so this time it's at 27, and then it just peaked back up into 32, so right back above oversold, and then it dropped right back down again, down to 23. So again, if your strategy was to buy when it's oversold and then stop loss when it hits oversold again because it's a failed cycle, you will lose money in this situation here. So one simple way to counteract this is to just simply set your oversold to much lower. So in here, for example, you could do it obviously in TradingView just by setting your lower band to 20, and now you see that this will naturally no longer cause you to buy. You won't buy in here, and you won't even buy in here because you're waiting for a better opportunity. So you're gonna be buying into this situation like these. So, and then you're just gonna hold essentially. It looks like this one is not gonna turn out very well in this particular case. So you could buy in at 18, which is essentially at 167.41 the close price. And then you're gonna have to wait and hold until it actually gets past here. It doesn't even get up to past 70 on this one. So, and actually it did even drop back below here. So basically you're still losing money. So essentially you can see how long it hold it, and then it dropped down at here and you lost money. But instead of losing that much money at that point in time, like, because basically it went from 167 to 162, so that's quite a bit of fall, like 3-4% minimum. What's one way that you can avoid getting into this situation where you're actually holding for that long? Because the other thing is, if you're holding for this long, literally from April 11th all the way to April 12th, so it's basically almost a day, but not longer than a day. This is usually not a good sign in my opinion, just because you're holding it for too long. And what the other thing is, this is helping me learn from here, going back into the code here, going back into the results actually, that the average duration is only 48 bars. So for the average completed cycle, it's only 48 candles. This one's already going all the way into 207 bars. You still end up losing. So it shows you that, there's probably better exit points. It shows you that this is a highly unusual trade, and it's not actually doing very well. So let's get into the code and let me show you basically what I did here. I essentially just ripped out like the guts of like one of my previous RSI strategies I've written up, and just instead of having actually do trading, going inside here and just adding a few things. Like at the beginning here, I added the name of the CSV file that I wanted to create. Right now the analysis uses candle batcher. So candle batcher, if you guys don't know, I probably covered in previous videos, is that it's a way for you to have Gekko act on candles that are as small as 1 minute in size. The point being is just so that you can have Gekko react to things faster, sell things faster. But in here, in this particular analysis, you can write additional batches of larger sizes and be able to, let's say, make a more deeper analysis and compare different time frames, which is very important. It's in terms of using it as a strategy for trading and charting. So, but right now I only have the 5-minute batch in here. I might, if I make a part 2 of this video, I would definitely cover a comparison between the different time frames. So, but in here right now, this just gives me the opportunity to have multiple batches and multiple time frames available in this analysis. So, and then right now I have a check 5. A check 5 essentially is just, how the normal check cycle, I'm going to scroll down right here. So every candle, Gekko will check and do something at every candle. This is the check function. So what I end up doing is just have it run the check 5 function at every 5th candle. So essentially it's just going to call the check 5 function every 5 minutes, so that it's actually going to treat it as a 5-minute candle. I mean, act on information every 5 minutes. So again, this is really because of the fact that analysis wise, you don't really care how quick Gekko can react to certain things because this is all backtest data. So, but the main point is, if you have two different batches, let's say you have a 5-minute and a 15-minute, so you will have like a check 15 in here, and then you will have it down in the check function to call the check 15 function every 15 minutes and be able to output information that you need. So inside the check 5 function, this is where the bulk of the work is done. The very basic, the log debug to tell me at every candle that it exited oversold. And essentially this is my particular strategy previously. What I did was I waited until it exited oversold territory before it gets into buy. So it doesn't actually buy as soon as it hits the oversold territory. It buys it after it exits out the oversold territory. So in this case, that's why I use it as a starting point for the cycle. So when it exits out the oversold territory, and it just grabs this information, the start cycle, it goes through. So because we're gonna keep track of things as soon as the cycle starts, and then we're gonna store the candle information, we're gonna store the candle close and the RSI data. So all this gets stored in the cycle information dictionary so that we can pull this out later. Now every cycle is going to increase the cycle duration, so we know how long the cycle is going on. So every candle we're going to increase the cycle duration only when start cycle is enabled. So only when the cycle has started. So now we have two options after that. We have a failed cycle, and then we have a completed cycle. So the failed cycle and completed cycle pretty much stored almost exactly the same information. Although as soon as it gets in there, like you can see that when it gets into the failed cycle, it is when this start cycle is true, and the RSI history 2 is actually the current bar. So and then it's oversold. It's like basically when it's less than oversold. Basically when your current bar falls below the oversold again. So that's when it gets into this particular if bracket. And here it's going to log the information again. It says return to oversold. This is just logs out to the terminal. But then the other things is like the fail cycle counter is ++. So this is where it actually increases the fail cycles so that we would know how many fail cycle has went through for this particular backtest. So we set the start cycle to false again. And then we can store the cycle duration. So every cycle duration we can store in this fail cycle duration array. So in here, we know this is how we're going to calculate the average duration, because we're just going to store every single duration inside this failed duration array, and then we're going to use a for loop to loop through it at the end, and we're going to process that information to get the average. So now we're going to add the cycle information again like before, the end time, the end price, and RSI into the cycle information dictionary, and we also add the cycle information to the duration so that we could also print it out into the spreadsheet. Obviously, the last line is we're adding a fail type in here. So and then we're going to call the write to log function, which will actually write to the CSV. So once you go scroll down to the write to log function in here, it's very similar to when we created the CSV file. The only difference is we're using the append instead of the write, because we don't want to overwrite our CSV, and you will end up only having one line of data. So we want to have it append. So after that's all done, and again, the completed cycle is pretty much the same thing, except that it's telling you that it's a completed cycle instead of a failed cycle. And in here, this part, actually, I'm going to write this in. This calculates the RSI high and low. So it'll let you know at the end what's the highest RSI and what's the lowest RSI. And then in here, we're going to the end. The end function is only called in backtest mode. So in backtest mode, we'll call this function at the end, at the completion of the backtest. As I mentioned, the for loop to calculate the completed cycle duration, to calculate the failed cycle duration, to find the average. Basically, is to you add it all together and you're just going to divide it. So you can be dividing, you can make the average F cycle, which is a fail cycle. All this information gets printed out, and this is what you see down here. So that's basically it to the code. So as I said previously, it's not a very good idea to use the 30 oversold and 70 overbought for this particular trade pair. So let's just change it to 20 and let's just see what happens over here. And there it goes. Now it's completed. Hey, look at this. This is a much better setup now as an end result. As you can see, the completed cycle is 80. So there's a lot less completed cycles because you're risking a lot less now. But then look at this. The failed cycle is only 71 instead of, was it 400 something before from buying too many times, pretty much, I would say. And you can see that the average duration is 83 for the completed cycles. The average fail duration is 53. So there's still some information that we can pull out from these things. But like now, we can also go into the spreadsheet and to take a look at the actual log and figure out what's going on. So right now I have it sorted already. You can see that this is all the completed section. I sorted by the cycle type and then sorted by duration, descending. So right now it's completed, and then on the bottom it's a failed. So what really is critical is to note this part right here. So you can see that the longer duration it is, the less likely that you're actually going to make money, as I pointed out before. So you're starting off at a start price of 374.96, and you end up at an end price of 360, meaning you lost money in this trade and you just held it for an exceedingly long time. This is like, well, this is actually about a day and a half. So, but you can see this is not a good idea to hold for this long. And then the same thing, you can see that these long durations are just going to be losers. So even though we set the oversold to 20, it's still having these loser trades because we're holding it for so long. This one's actually a winner for 229, but you can see that even the next ones, this is still a loser at 218. This one's still a loser at 170 bars. And this is the first winners. Now you can see some more profitable ones around 162 duration, 148, 145, 130, 128, and 123. And this was a huge gain from 462 to 490. So, and then there's still ones that you end up losing money tiny bit here, like 413.98 to 411.84. You just can't avoid it. This is, but overall you can see most of these are winners from this point on. So remember, we started off with a very basic criteria where we buy when it's oversold, and then we have two criteria for selling. So one is to sell when it's overbought. The other is to sell when it hits oversold again. So, but now you can see we can add an additional criteria right here. We can say if the duration is over 130 candles, let us sell it. We're not, as long, maybe we could say as long as it's profitable, or maybe as long as it's like a 2% loss or something like that, so that you wouldn't lose too much. Or you can just have it wait, or you can have it as soon as once it hits the 130 candle, sell as soon as it gets to the point where you're losing a minimum amount, or maybe even make a tiny profit, just because you know there's a very unlikely that the longer you hold it, that you actually make money on this trade. So you can set a new criteria, and that is the whole idea of today's video, is to talk about the fact that you can use backtesting to help you write better strategies, because this particular analysis is helping you understand what the RSI indicator is actually telling you, rather than just like having a brute force process of standard backtesting and standard optimization, just optimizing it based on your best possible trades. So that is my video for today, guys. Let me know what you guys think. Leave a comment down below. I know this one's a little bit more complicated, but once you get into it and really be able to use this analysis, you can find a lot of value with this. So as always, I am on Patreon, so I appreciate it if you guys become a patron. And I just want to give a shout out to James Lin. He's my newest patron, so thank you very much, James, for becoming my newest patron. And I would like to thank all of you guys listed on here, from BrainMe, Crypto Dragon, everyone here, from Poseidon 70 BTC, everyone here. Truly appreciate it for being my patron. If it isn't crypto, it isn't worth mining, it isn't worth speculating. Peace out.